In today's video, we take a look at everything to do with the stock, crypto, and commodities markets right now in what's been a period of incredible volatility and big crashes. The crypto market's down 50 to 80% depending on which coin you're in. The stock market's down upwards of almost 20% in some indices, and the opportunity is waiting for you if you know some of the key zones to be looking at. So with the Fed coming out, big earnings, and everything else, this one is sure to be a great video. Stay tuned, guys. We'll see you soon. All right, everyone. Well, welcome back to the video. And of course, one of the best places for us to start today's video is to discuss everything to do with the stock market, large companies right now, as they're all interconnected, these markets. And I think you'll start seeing that if you've been watching our videos for some time. If not, remember to subscribe. You may find out that you've learned something new. Let's move over here to the heat map though, and we saw some big sell-offs. Netflix ended up opening, of course, down after its post-market earnings. It was down 21.79%. Amazing to see a company like that fall so far. Tesla underneath 1,000. We'll be having a very close look at that one. Amazon down another 6%. Apple looked like it wasn't down the most compared to everything else. Earnings coming up this week, and just everything across the board was not healthy for that Friday session. And this is leading on to those fears constantly coming through the market. Now, we did see a small rally in the start of the session, small sell-off followed by rally. This is really, in my belief and many others out there, trapping people into this buy the dip scenario. Buy the dip's been working for so long that when they start to take advantage of this, these rallies in the morning can often be false, and we need to be very careful for that. Maybe it's more of you need to see a sell-off in the futures and then start to see a bit of a base forming into a rally throughout the session, and that's when we'll actually be finding our base. The rest of the market fell for the rest of the day. Nasdaq actually was the weakest, 2.75% down on the Friday session. And when we go and have a look at the sectors, we'll notice that it was continuation of really defensive sectors holding up. XLP, consumer staples, real estate, utilities, these were all barely down on the day or flat. And the other ones like XLC, TAN, Solar Index, and of course technology and semiconductors, they were all taking a big beating throughout the session. This brings us to an interesting month to date though, and I think we need to keep this in mind whenever we're looking at markets, whenever we're talking about markets in general. Everybody thinks that everything's crashing right now, and that's not quite true. And we'll take a look at the bond market to get a bit of an idea that this could be an opportunity if we know how to find it. And hopefully we can get through today and show some of the ways that we can make it opportunity. The energy here, the sector is 12.52% up month to date. So that's the January period. We have jets, of course, airplane companies, not down that much. And while things like the solar index, of course, biotech, semiconductors, all these growth areas or growth stocks are really taking a hammering, it's not across the board. It's very specific sectors of the market. It just turns out that they're some of the biggest ones. And speaking of big news and big earners and big companies, this week is an absolute massive one for news. If you're not aware of the earnings results, make sure you get these release reports so you're aware of the big companies. We have Microsoft coming out. Obviously, a lot of people looking at Tesla after the close on Wednesday in New York. And of course, we have Apple, MasterCard, McDonald's, Visa. There's so much technology, so many large companies. This is super earnings week. And it just so happens to be going in at the same time that the Federal Reserve will be coming out with their statement. So will it be a continuation of selling the rumor or selling this idea of uncertainty into all of this economic news? We'll have to find out, but we've got some key levels that we should be looking at this week a little bit later throughout the video. Another thing that I think we all need to keep in our minds is that while the Fed does rate hike, and they will most likely rate hike in March, maybe we'll find out some more certainty on that this week, we are going to most likely also see a positive market after some time. So while you might be looking at the markets thinking, wow, this is finally the crash, this is finally the worst thing that we've ever seen and everything's going back down, just keep in mind that if you are a long holder, an investor or a trader that has a long time horizon on their trades, if you came back in 12 months, statistically after the raises have been done, we generally do see positive markets. On top of that, we also have the double up. And this is what we've been discussing now for at least a week. We're not only in a year of potential rate rises, no doubt they'll come. How many, we don't know yet. But we also have a midterm year in terms of elections. These are usually quite poor. And then if you return a year later, they turn out to be very good buying the dip opportunity. So if you're buying the right stocks, the right indices, the right sectors, sometimes they can be opportunity. And that's why we say that it's worthwhile paying attention sometimes to the stats, keeping your mind open to this stuff so that you don't feel that overall fear that everyone's getting now. And I'm starting to really see it come through in the communities out there where everyone's freaking out. And I know it's because so many of us have lost money in this crash or correction that's going on right now. But we need to keep an open mind. What do you guys think though? Let me know in the comments down below. Do you think this is the crash that begins it all? Or do you think that we're getting close now to a potential bottom? We know volatility for the Jan, Feb, March period can be high, but it jumps right back down in April, May. I think something we need to keep remembering here over the 20 years. And also that technology can be weak at this period of the year. So not only is the interest rates causing this, but at the same time, tech can be quite weak. Let's get into the technical analysis though and start talking about some of the key levels. So we're seeing the VIX here going up to 28.84. We do expect the VIX to continue to rise and probably have another couple of points in it. Now, this is something we talked about last week, buying this VIX concept maybe into the Fed announcement. Now, we know the Fed's coming out Wednesday. So the VIX in the uncertainty in the market may continue through to maybe the day before or the day of the actual announcements. But this is where our resistance is. Around that 30 to 32 for the VIX has been a point where it's sold off almost each time it's spiked up there. And therefore the volatility has been coming out of the market. Some form of base has been found. Something that I think that many people should be paying attention to is how high is this VIX going, and really is it consistently going to hold, especially when we have that news coming out. Another thing is the 2-year yield is actually dropping. So you would think, oh, the market's crashing, the market's correcting, everything looks bad, Tom, doesn't it? Yeah, well, it certainly does on paper, but you would think at the same point we'd be continuing to see a spike in the 2-year rate, a spike in bonds heavily, a move to safety. We're just not seeing that quite at this stage from a perspective of how many interest rates are being priced in. It's actually dropped back to 1.006% from much higher. And if this continues to show weakness here, it could also be showing us that the markets may be overreacted. It's got jumped in front of the Fed. And I think that's what a lot of traders out there are starting to realize. This could be a little bit of an overreaction to really draw out a lot of the leverage in the market and a lot of people that are freaking out about certain stocks. Let's move over to TLT. This is, of course, the bond section. 20-year treasury bonds, are they spiking up? Is that where we're seeing a big flight to safety? Traditionally, when markets are crashing, properly crashing, or having a really big, serious correction, we see bonds moving up quite a lot more. Now, obviously, at this stage, we're just not seeing that due to, of course, all these interest rate things and the repricing of these over time, but we're not seeing a huge flight into bonds, and we're obviously not seeing a huge flight into crypto. So it seems to be that this money is sitting parked on the sidelines throughout all different assets, and no one is truly freaking out here from all sectors. Remember, energy's still up. We've seen a lot of other sectors holding relatively well. It's not a broad-based sell-off across every asset class. It's more things that are susceptible to the interest rate hikes. Another good sign here potentially coming in for traders is going to be the PCC spiking up. This means that there is a large amount, or there are a large amount of calls and puts, but specifically the put rate has risen heavily over the last couple of days of trade. Now, we always talk about when the puts are really low and no one expects a bit of a crash in the market. That's often where we use it as a counterintuitive thing, and we notice that there is a huge amount of puts that end up coming in after that. So that's when nobody expects a crash, we end up getting this really low amount of puts in the market. When everyone's seeing the crash, we get this high spike in puts, and it can be very close to the low. Look over here, we got that massive spike in puts right around that March kind of 10th to 20th. Most of you would know soon after that, we actually hit the low point of the market and it turned around. Just like this time, this is the highest amount of puts we've seen in the market for quite some time. So we will look at that later on in the video as well. Let's move over to gold. Some of the safe havens did break up. This is a trade we've been talking about for a long time. 1830 fully cracked here on the weekly as well. While it did pull down through the week, in general, it's above the 1830, 1831 area. And when we go into something like the daily time frame, while it's not looking incredibly, oh wow, I love this so much, it is still holding up around that 1830 zone. This is where we expect role reversal to occur. And if we continue to see the small time frames create lightning bolts, double bottoms, we should be on the way to 1870. Silver and gold still looking relatively strong here into the week ahead. Silver, another one, hit the first take profit. This was much better than gold. But at the same time, we're just looking for a turnaround here on silver. Get back above 2460-ish, then we can move towards 2540. And I'm sure many silver and gold bugs are starting to see positive signs. 2050 cross, the red and the blue line moving above each other, a big deal there. And hopefully this resistance doesn't hold up and we end up seeing that continuation through platinum, palladium, all these types of metals, just really showing signs of strength across that board. Oil was another one that's come down. Before we get into the stock market, I just want to quickly talk about oil. Oil closes right on resistance. Bit of a resistance breach as well, followed by a fairly decent sell-off. So we have to go into the smaller time frames to figure out what's going on, and it is confused. You can tell that. The oil market doesn't quite know what to do. It sells off, it has another day of sell-off, then it ends up rallying, and effectively if you took a 2-day here, what would you get? An open, a close, a high, a low, effectively a long leg doji for anyone that doesn't know. That is a full-on indecision candle. I think it's going to be a tough week here to trade oil, though if you want to, small time frames are going to be the key. Just like we've been discussing, when the VIX is above 20, what do we need to do? We need to scalp, we need to day trade, we need to find investment levels that we like for the longer term. Swing trading is very tough during these volatile times as we see massive shifts in market sentiment on the daily show. Like, it's happening here all the time. Remember to subscribe as well, because we do produce this content daily for these shows, talking about the markets, talking about these changes. And that's why I think oil is going to be a little bit difficult to trade this week unless you're on the smaller time frames. Let's move over now to stocks before we do crypto and the rest of the indices. And I think this is the one that everyone's been discussing. Tesla, 943.90. A lot of people into the earnings announcement, which is coming out in only a few days, Wednesday after the close, are starting to think, oh, I want that value. Underneath 1,000, we suspected that it would sell off fairly hard. It certainly did. It was down 5.26% on the day. And the next level that comes up is around this 900. So we've got our old trend line here that we were using before that big ramp, but we still have 900. Now, if you're someone that likes taking these types of things into earnings and you believe in Tesla, it's going to be close to your buy zone, isn't it? Now, if you are someone that's a little bit scared of earnings, which, well, you should be, it's going to be risky just in general because we don't know how the market's going to interpret it. This could be a week where you have to wait for the actual announcement and then make a more informed decision. It's tough. It's going to be tough. And I think there could be a little bit further sell-off here before we may see rally. So it would make sense that Tesla could be around this $900 coming into earnings, or if it did rally, sub 1,000, finding resistance around this zone. Watch the smaller time frames, go into things like the daily as well, and understand that we have huge levels of support on 1,000, which could now become a bit of a level of resistance. Like last rally, look where it hit, 1,000, straight back down. So any rally around that 1,000, a lot of people are going to be looking at selling that back down, especially if it happens pre-news announcement. Earnings, not many days away. We'll be watching key levels 900 and possibly just underneath that around this trend line. Could be as low as 850, 860, upwards of 880. We'll keep an eye on that one. Let's move over to Apple, 162.41. It was nowhere near as bad as some of the other large tech stocks. We've talked about the idea of this double top. That would complete around this 152 area, 150. Big trend line back in the past as well that's happened. Earnings, only 5 days. The thing with Apple is it often actually buys into the earnings. So this one saw the earnings happened here and then it actually continued to buy for a few weeks. But in general, earnings have been a bit of a disappointment. Here earnings sideways the market. Here earnings sent Apple down. Here earnings again sent Apple down, again sent it down, and this one here was a positive one. So if we were taking the average of what earnings has been doing, in general, it has been disappointing the market. And with those chip shortages that we've been seeing across the board, maybe Apple isn't doing as well. We don't know. We can't speculate so much on that number other than the TA currently is showing weakness down to a key point down here, and we'd be looking for those signs of accumulation. Double bottoms, lightning bolts, engulfing candles, some sign around these levels that we're actually finding a base. Currently not seeing that on Apple. Again, we get small time frames here. Most rallies you would think be met by sellers. You rally up to 167. What's going to happen there? You hit moving averages, you hit previous supports, and you find maybe some form of resistance. So be careful here and look at the broader market to make better informed decisions. Speaking of broader market, we'll go to our sector of interest for the week ahead, and that's going to be semiconductors. It's fallen through the first point of resistance, just sold straight through it. So will we move now down to this 260? And I think this is a sector that a lot of people are very, very interested in. Semiconductors have been a massive outperformer since really the last decade. But if we think about it, we're going to have these things everywhere throughout our house, everywhere throughout our lives, and they're certainly a great sector to be in. We're now going back almost to February highs of 2021. So you're almost wiping an entire year of gains off in terms of if you're a longer term investor and you want to pick up these zones. That's pretty exciting, I think, if you're in the right hand of being able to find better levels. We've got a 50 exponential moving average here on the weekly 50. We've got a 260 in terms of previous highs. That might be a bit of a zone. And then coupled with that, we also have a small trend line that's been coming through the back here. So not a huge, great level, but certainly one that has some coinciding reasons why you may like it. And that hits around that 260. And it may also move in with our Nasdaq discussion soon. Let's move over to IWM. This is, of course, the sector that's showing the real weakness across the board. It's small cap companies. For anyone that doesn't know, it's the 2,000 smaller companies in the US. And what we end up getting here is we get this 196.99. Now, it's basically Wyckoff distribution. And that means that we have a false breakout up here, which we obviously have discussed many, many times here on the channel. We have what looks like a channel, and then we take the distance here, and usually these are less likely to be fake signals. Wyckoff distribution takes a long time to happen. This actually took a year to occur, and it can show further weakness in the market. So small cap companies are a good, I guess, baseline of strength or weakness in the economy and the overall strength or breadth of the move up or down. When you see small caps doing really well, it's a great sign the rest of the market is also feeling fantastic. When small caps take the brunt of the sell, that can mean more economic worries. So we're sitting here at 196. We're still looking at possible rallies here unless the Fed changes their minds to be met by selling demand. And at this stage, we're certainly not down near that 185-ish area that it's predicting in terms of TA. So we've got to be careful here and continue to watch the major indices. IWM does look weak. Let's move over to the Nasdaq. So the Nasdaq's through and closed below its weekly 50. To put this in perspective for everybody, this thing is down, and it is down underneath our ascending channel that we've been using here together as a community for so long. We've used this ascending channel for ages to be able to buy the dip, to be able to buy the support. And as we know, long leg dojis have been a great signal for us with new lows not being formed ever before. But this time we got it this week. We saw the weakness. It continued to occur. Of course, we had to go bearish at that stage. We couldn't no longer say, oh, this is a great buy the dip from the action of this ascending channel. So now that we're in uncharted territory, where does this Nasdaq stop? Does it stop right here? Or is it more likely to probably continue down to maybe a psychological level? We've got 14,000 in front of it. And that actually takes us back to periods of February and of course April in 2021. So basically again, wiping off a year's worth of gains if it gets down to these levels. 14,000 makes some sense, but only when you couple it up with the S&P 500, which is of course the major index you should always show the biggest bias towards in terms of technical signals. To stop here, Maybe it will. I mean, you are literally at the first support. You can see here, big support line through the last two lows. But if it gets through here, 14,000, you'd have to expect as the next key level. Bits to watch here for scalpers, day traders, and of course, investors. If you're looking for bounces at this zone, a lot of it's going to be about lightning bolts, double bottoms, and some of the things that we teach in our course and other things. If you're interested as well, we do have a special Australia Day discount in the links down below if you're interested in our course. Let's move over to the S&P 500. Yes, it's coming up to support, and yes, this is exactly what we expected it to do. Through the weekly 20, weekly 50, highly likely to be the next level. That's the blue line here. It's also coupling up well with previous support. So that's around that 4,300 to 43 kind of 50 zone. We're getting very close to the 4,300 now, 4,397 on the close. This is the highlighted zone we've had here for a few weeks, guys. We've all had it together, and this is where I think the Fed will most likely be making their announcement. Will the market continue to sell into this? You'd have to think so. It's going to try to get down to this zone before the news comes out. Then when the news comes out, it will do battle with the zone. It's funny how this always happens. When you have big bits of news or big earnings results or anything, you'll notice often a company or a stock will go towards a key point of resistance or go towards a key point of support. Then when that announcement comes out, it will do battle with this zone, and that's how it breaks through areas. Any Forex traders out there as well would be well aware of this phenomenon. So usually resistance and support levels can be hit around that news event. We're thinking it's a possibility it does this Monday, Tuesday this week, and then into that Wednesday session, we find out what the truth is. Where does it go from there? Pretty much anything that goes underneath the 50 exponential moving average in our general concepts has taken more months to recover. So that means that if it gets underneath the 50 in general, it takes around 2 to 3 months to see that full recovery, or at least that 3/4 worth of recovery in the market. It can take some time, and I think we need to keep that in mind as well. If it is to recover, the 50 exponential moving average close below can really lengthen how long it takes to recover up here. So let's move over now to crypto, and everyone's discussing this. Crypto is effectively crashed here. I mean, 50% down on Bitcoin's a pretty big fall. Some of the alts are down upwards of 80% now. It was a bleak weekend, a bleak Friday, and of course, a lot of sell-offs across the board. Now, is this the phenomenon of Chinese New Year? Even though China doesn't have as much to do with the crypto market anymore and as much influence on it, I think a lot of people still trade this concept, and we discussed it in the previous weeks with this idea of Chinese New Year showing weakness. Now, I have a feeling, and you may agree with me or not agree with me, that we saw a sell-off before the Chinese New Year, which isn't uncommon. It has occurred several times before. It's why we quickly brought it up over the last couple of weeks, because it's one of those things that does happen. And we tend to see also a lowering of volume over this period. So we see not only maybe sideways action to slightly down action, but no really large increases. The only year that's been a little bit different is 2021. 2020 was again sideways action. 2019 actually ended up creating a bit of a fall. In other years, it has been one of the phenomenons. It is something that some people pay attention to, and it may be partly why people selling off ahead of what is known to be a seasonal type of thing to a degree. Maybe that's one of the reasons. Bitcoin now trading at 35,387, regardless of what we believe about the Chinese New Year seasonality. This thing went through 40,000, and as soon as it did, yeah, we knew it was bad and it was going to be pretty bleak, and it was. Let's have a look at the daily. Let's have a look at what ended up happening. So it got through, it closed some of the smaller time frames down. That candle coming into it was certainly not presenting well, and it sold straight off here into the 34,000. Will this be the lowest point though for Bitcoin? That's tough to tell. If we have a look here at a 2-week or 1-week chart, you'll notice the types of distance or the range it took to find these supports. We usually found support heavily around that 32K, not necessarily 34K. And I think that's going to be one of the tough parts for us here. We look at the weekly, we bring over the monthly. We're struggling here with crypto. It's hard to see rallies coming through at this point. Is this the base? The good thing is generally crypto will give us some form of buying signal. If you look at other crashes or other corrections in the past, we've got a double bottom here. In this one over here, we end up getting a lightning bolt. It was pretty slow though, in terms of it was so fast that it took a while to get really good action on it, but we did get a nice support return. And in other ones, we've generally got shorter lightning bolts. One like here, big rally resumes. So for crypto, it's tough to buy it here into Chinese New Year. If you have an investment goal, maybe you do. Traders, could be a bit scary here for a little bit. Clarity needs to be found. We should find it when we get some volume coming in through the Monday, Tuesday session. But what do you think? It's a little bit tough here, I think, for crypto, especially Bitcoin, when it's in the middle of nowhere land. And we can't be sure that this is the base due to supports being more commonly found around that 30 to 32K area. Ethereum, same thing, sitting at 2,500. Is that enough for it? It doesn't really look like a key support it's hit before. Maybe it's the base. The TA is not showing us it yet. More likely that 2,000 could also happen. So we've got this bearish sentiment here currently. We haven't seen turnaround. We've just seen a bit of buying pressure. They can be short-lived, and we will have problems, no doubt, with a lot of these coins should they return back to their bases. 3,000 on Ethereum, 40,000 on Bitcoin. If we rally up, where do we think the sellers are going to be? Around those levels. Something to be wary of, I think, as well. BTC shorts declining slightly. Maybe that's a sign that we're starting to find the base. We're seeing the big guys reducing their shorts and probably buying up the coins to a degree. For economic news for the week ahead, you need to be aware of course, the FOMC stuff. So if we're looking at this month in terms of January, we need to always have our economic calendars going through. We need to be very, very well aware of what's happening in the weeks ahead. And for this week, it's Wednesday, January 26th. We have the FOMC statement, the federal funds rate, and of course the press conference. That's the big one that the markets will be looking at. And please remember, when you're trading crypto at the moment, it seems to be quite geared towards the Nasdaq as well. And it has been for a while. If the Nasdaq is falling, crypto is taking a pummeling. If the Nasdaq is finding some health and finding some return, often it's correlated with Bitcoin increase. So if we find a base on the markets, even if you're a crypto trader, they are interconnected. They tend to be doing the same kind of things. It's a long one today, guys, but if you enjoyed the video, please remember to subscribe, smash that like button, and we'll see you very soon. Bye for now.